Welcome to TradeTheNBA.com. This is John. This report is for the 15th of December. Post-birthday festivities all taking place, and the market, well, pretty much still at the same 4,000. And so when we talked after here about the big bump up in this sideways move, even with a little bit of positive action, was mostly coming off this gold rise in the shakeout that we saw. And pretty much holding its own, even within the sell signals, the buy signals giving a little bit of pushes back and forth. The most recent being this last bump before the CPI numbers that then really don't help with anything in the sense that things are still elevated. They're going to stay elevated, but not at the same rate they were. So from that catastrophe, it's not as bad. But rising MBI white certainly puts pressure to the downside, but with green still leading on the DOC, not horrible shakeout also rising. We had the positive extreme from the big run up, um, but it had been filled already. So took place yesterday, filled it right in. So those are all congruent, and we're exactly getting close to that same 4,008 support level. A little bit harder for it to hold it though at this particular stage, given what these readings are. Nasdaq's a little bit worse here, with magenta, already just a fraction below yellow, and so that puts that within the sell signal. You still don't have much short activity, so this is just a bull failure, if you want to say, just not enough oomph to push it through. There's just not a lot of active attacking. Bond market is also confused here because this is back and forth, but rather elevated given what the Fed indicates it's going to do. This is an expectation for significant rate cuts by middle of next year. So you'd have to have some kind of catastrophe for that to happen. Oil pushing back up into the mid 70s here. Still an improvement, but again, until we're down in the 60s and 50s, are you out of the woods, at least from a cost standpoint? But you're still going to be left with the residuals of everything being elevated in price. Gold, uh, not able to quite break out yet here. We're still in a little bit of a weak run, um, but it's still been fairly strong. Seen a little bit more short activity in some of the short-term buyers that jumped into it relative to thinking that there was going to be some softness. Not too exuberant at this particular stage, and the euro, of course, skyrocketing on this idea that the U.S. is going to stop, and the weaker oil, for the most part, I think has been the biggest driver of it. That Europe is not facing a existential crisis for energy in that right now, and so all those things aiding and bringing the euro back up, and Bitcoin still holding right around that 17.7 handle, 50% marker. Not bad. The biggest thing about this, though, is the improvement in the shakeout, moving to positive. So for the first time in a long while, um, you know, all the way back here into the beginning of November, late October, when you actually had positive shakeout. But for the majority of the last several months, we've been in negative territory with it. And obviously, the scandals, everything else, certainly weighing in on that. And you know, playing into question its viability as a replacement, but also giving some strength to the idea that it's got a base value. So there's that, and from a trading vehicle, has potentials. Likewise with ETH, still holding right there. And of course, these are all off the peaks, and of course that destruction of wealth has been significant and certainly helped dried up some of the excess liquidity that existed out there. And when you look at it from a broad standpoint, from a Fed view, um, all those things have an impact because you just, energy costs, everything else, it just sucks all of that excess that they did. And they're thinking, we're going to get away with it, having printed all that. Um, where you don't get away with it is though the budget deficits and that and those continuing just they make it tough. But if your dollar is worth less, then it's not so bad uh, in time. I mean, when you think about it, like from the 70s when we had the hyperinflation, literally, it basically eliminated the debt that was considered, astronomical at a few billion. Funny times when all we talk about is trillions now. Anyway, from a 50K standpoint, also soft. We had the pivot close over. That's heading lower. And from a 5K, that was okay. It was more than you could fit on a chart. So that indicates that there was some volume. Nice little rise up, but started with just a brief positive extreme. Didn't take long for that one to fill out. And then it made another run at the peak. But again, you're still playing at these same algo levels. That's why we see these same magenta lines all throughout. And then when the sell came, it just took them all through. And we do notice, though, that the sell depth is far more compressed in the sense that it takes fewer bars to get the decline than it does for the jagged run back up higher. So that just indicates to me that there are just uh, plenty of softness out there. And if someone's not there supporting the liquidity side of it, things move much quicker than they accelerate. But then markets always do fall faster than they rise by a significant portion. All in all, I think that we're probably just going to have a little bit more of the same. The ranges are still going to be spectacular. I mean, these are pretty darn good moves. We're looking at 4080 at the top side there, all the way down to just above 4,000. So, yeah, that's a significant swing intraday. As always, though, trade well. We'll talk again later. We'll see you on the Skype chat.